China's central bank has unexpectedly cut its key interest rates as it aims to support an economy weighed by COVID lockdowns and a deepening property downturn. It's the second time the People's Bank of China cut rates this year. The rate cut came just before data showing home prices fell again in July, while industrial output and retail sales were also weaker than expected. The problems facing the economy have clearly continued into August, with some home buyers still refusing to pay mortgages on unfinished homes. COVID cases are also on the rise once again in China. For more on this now, let's bring in David Madden, who is Equiti Capital market analyst in London. Welcome back to the show, David. First of all, despite the stimulus measures by the PBOC, if we look at consumer confidence there, the data is still weak. Why?
Well, these cuts and actions by the People's Bank of China, they'll take some time to kind of trickle down to the economy. It's almost as if the disappointing and kind of cooling retail sales figures, industrial production figures, and fixed income investment figures that we saw today were exactly why we saw those interest rate cuts, which will hopefully turn those metrics around in the months ahead. It takes a few months for these things to actually work their way through the economy. But keep in mind, it wasn't that long ago we had various different harsh lockdowns and restrictions imposed in various pockets of China. And the figures that we're seeing today are kind of the trickle-on impact of those numbers that we saw, those actions that we saw down the line. So it's also the actions by the Chinese central bank today of actually, cutting interest rates. It's almost like a kind of admission that we actually do need to assist our economy. But historically speaking, lowering interest rates does not always, but does have a track record of boosting economic output. So, towards the end of the year, November, December, we could see a bit of a turning around in consumer activity and retail sales.
Right, we'll see what happens on that front. But at the same time, I really want to zero in on the residential construction sector, because what's happening there? What's the outlook? There seems to still be delays to new build projects and still uncertainty in the property market really weighing on the economy. What's the outlook?
Well, as I mentioned a moment ago, the lockdowns that are actually taking place in various pockets of China only a few months ago, there's a ripple-on impact of supply chains being impacted. Logistics are still not back to the point where they should be at. These are issues that are hanging over the sector. There's also concerns about the health of the actual property market itself. China, like other places, has experienced a phenomenal property boom. Therefore, prices are elevated, and in turn, it's harder to actually get on the property ladder. And also, when you see headlines about prices are stalling, there are concerns about the overall health of the market. How reliable, how much more growth can we achieve out of it? These are the sorts of things that actually kind of chip away at the desire to go out and actually purchase a property. It's also worth pointing out, although the unemployment rate is coming down in the past few months since the economy has reopened, it's still at a relatively high level over the past 12 or 18 months. So we're still not back at the economic level China was at before it had the various lockdowns in 2022.
Absolutely, and youth unemployment as well, very high, at record high. David Madden, many thanks for this interesting update.